Okay, I'm going to introduce Billy Corbett, CEO of Spyglass, which is a subsidiary that owns Digital Power Lending. We'll get into Spyglass later in the year and explain what Spyglass's products are. But this first quote is really important to us because it's an underserved market. Billy brings us a lot of public company experience, a lot of pipe experience, and he's going to talk about a recent transaction he did in the last 7 months, which we realize this is a transaction where we lent money, made money, converted out in the public space under the umbrella of Digital Power Lending. Billy Corbett.
Hello. Thank you very much for coming. I'd like to also thank everybody online that's participating. We really appreciate the time and the support. So I think this slide is paramount. It really gives you an idea of what's going on in the marketplace with $200 billion worth of loans over basically about 24 million loans. And there's an unmet demand out there. Actually, this is about a year old. The new numbers are somewhere around the $100 billion unmet demand, which is pretty exciting for us as we look at it because we can bifurcate the division as both public and private, and gives us an opportunity to really grow and ramp this business, which we're just actually underway with the California Finance Lending Arm license that we got in February of 2018. And that's really the critical point of this business, is the ability with this California Finance Lending Arm to go out and charge origination fees, to bring in syndicates. As Todd mentioned earlier, it's a lot like SoFi and On Deck, with the ability to really be a part of companies both on the public and the private side as far as the capital that we can give them that's secured, that can convert and develop a portfolio of warrants at the same time. And we can talk about that as we go along. So basically, Digital Power Lending specializes in providing capital financing for small businesses through innovative products and services. DPL is really a referral-based business seeking unique opportunities to assist in the growth of dynamic companies with operational experience, good management, and market-accepted products and services. DPL is a limited liability company and a wholly owned subsidiary of Spyglass Hill Capital Lending Corp., which is a Delaware corp. Spyglass Hill Capital Lending Corp. Operates monthlyinterest.com, which is a new online portal that facilitates investments that pay monthly interest. It enables individuals to select industry, the length of the investment, and the interest rate that best fits their needs. Investments may be made across a whole host of different businesses. Primarily now we're focused in our real estate developments. We look at high-tech companies, both private and public, commercial lending, merchant cash advances, and other pecuniary projects. Important source of the private funding for DPW comes from this, and DPW's investment portfolio and divisions, as well as our subsidiaries that allow Digital Power Lending to lend money. Spyglass Hill Capital Lending Corp. Is raising capital from institutions, family offices, endowments, accredited and non-accredited investors to deploy into a portfolio of loans through DPL and the investment portfolio of DPW Holdings and its subsidiaries. And this is really important because what we have is a unique ability to bring capital in on one arm and then take that money at DPL and go lend it out to various companies that we think are compelling, in the sense that they have plenty of asset coverage. They also have tremendous upside in the event that they execute. DPL is a registered California finance lender. There's the license number. So basically, Spyglass Hill Capital Lending and monthly interest provide a marketplace that enables DPL to offer secured loans to small public and private businesses that is designed to create a much needed alternative to the costly cash advance payday type small business lenders. So as we talked about earlier, what you have is a great opportunity for sub $250,000, sub $500,000 loans that are not being currently met by small businesses. The regulators, the banks they're making it very difficult for small businesses to get capital. We've seen it on Wall Street in a lot of ways where they've really made it prohibitive to put stocks in brokerage accounts. They've made it, FINRA included, very difficult for small businesses to get access to capital. So therein lies a great opportunity for what we're doing at Digital Power Lending. Changes in regulations due to the Jobs Act, which was the first start of trying to open this capital up to small businesses, enable individuals for the first time to participate in compelling investment opportunities that weren't really only offered by institutions and big Wall Street firms. The Main Street to meets Wall Street thesis really is our theme and philosophy and the driver behind what we're doing on the lending arm, particularly with Spyglass Hill Capital Lending, which is a non-bank holding company that owns DPL. We raise capital through Spyglass and monthly interest, and in turn provide opportunities to institutions and individuals to profit from secured loans that DPL lends to companies. So our focus really this year is, as Todd had mentioned, to really try and build our own balance sheet. So at some point we can spin this off. But DPL is focused on building its balance sheet in 2019. We're participating in several syndicates, both on the merchant cash advance side as well as the public side. And what I mean by that is I spent a considerable amount of time building companies on Wall Street, and in doing so developed 20, 25-year relationships with institutions that really like to bring partners that they can trust, people that they think bring value add, in the sense of putting together private placements in the form of PIPEs, which is a private investment in public equities, which you might recall Warren Buffett did when he put his money into Goldman Sachs during the recession of '09, the Great Recession, as well as Gillette and General Electric in the $5 billion transactions that he was doing. When I started the pipe business in the mid-'90s, people really considered them, equipment under a sink. But the reality is that it's become an incredible opportunity for public companies to gather capital. And if it's done properly and the people that are running these companies execute, it's quite profitable business for the investors as well. So we're going to continue to build on an existing network of these sophisticated friends of ours, and we'll allow DPL to fund what we consider the best opportunities on the street in well-managed and compelling growth companies. The team continues to target gains in the 20 to the 50% range, and while our attorneys would say that's not a guarantee, we believe that we've shown that we can do that. We think we're going to continue to do that, and with the right opportunities, we think that we can do that in both the public and the private companies. So our team is led by me. I have spent 30 years on Wall Street. I started with the big firms of Bear Stearns and Lehman Brothers. I was an investment banker. I ran a small boutique company out of San Francisco, an investment banking firm, for 12 years as its CEO. As I mentioned earlier, we don't like to brag, but we were instrumental in starting the pipe business in the mid-'90s. We reached acclaim through a $50 million private placement in a company called Informix in the late '90s. Saved the company a year later, and that pipe enabled them to sell the company to IBM for $1 billion. The investors made an awful lot of money in that. And it kind of jump-started the whole credibility of the pipe space back in the '90s. I've raised billions of dollars. I basically try to leverage my knowledge, which some would question isn't much, but we have an awful lot of experience and we have great reputation and relationships. And we basically try to provide our investors with an opportunity to participate in new transactions that are targeting undervalued companies. I've got a great team around me. They're very supportive. We continue to build with great people, with great integrity. And we see, this Wall Street meets Main Street as a great path to growing this business. We basically like to provide capital in what we consider growth companies. So we're not trying to pick the next startup. We're actually very focused on companies that have revenue that we think are undervalued. On the public side, we like to see liquidity. We can talk about that. We like to have a time horizon of 6 to 9 months. I'll explain one of the transactions we just did. So as we talked about, we got our license, which is not an easy thing to do. It takes a long time. They do a lot of background checks on us. We've eventually took this license and got it approved in February of 2018. It was about an 8-month process. Our target on the public side is really, annualized returns that sound crazy but can be done, and we've been doing it in the 50% return area. DPL acquired through its investments a portfolio of 3 to 5 year warrants in public entities. This is a really important factor in the business model because as you make these investments, for example, we recently put an investment in a publicly traded company. Some friends of mine had engineered a turnaround. We put in about $150,000 in a convertible debenture, which was secured against the assets of the company. We made 20% on the investment. We kept 100% warrant coverage. And the reason that is critical is if you assume that you're taking your capital or your equity risk off the table, you basically have a free rider on the upside if the company continues to execute for the next 3 to 5 years.
Billy, let me add to what Billy's saying. What's important about what Billy's doing, you can stay up there, it's fine. What's critical about what he's doing is that, as Billy, the other Bill would say, I get up with these eclectic ideas. As a California lender and our ability to lend in other states, we're able to make loans to public companies, keep a warrant portfolio, but avoid the 40 Act because we're in the business of lending. There's a lot of strategic leverage that people don't understand about digital power lending because as we make a loan but get a carry in that underlying business, we build a portfolio of future assets without any capital really at risk once we get our money returned to us. And more importantly to me, on top of that is we get to get a lot of looks. We get to look at a lot of other public companies and opportunities to where down the road. Now, will tell you we're not allowed to buy anything right now, so it's irrelevant that we're looking at anything because no matter how good of a deal it is, it's not going to happen right now. We got to digest what we have, but you can kind of see that having the loan portfolio and his access to public companies and private companies gives us deal flow and return on our money. Really, the last loan you did was a great loan. It turned out to be great. Yeah. And we expect to get a high rate of return on those loans.
Yeah. And just to elaborate a little bit on the warrants, in my 25 years of owning warrants or participating in warrants, they're really remarkable because although one could make a case that says that the majority of them expire worthless, there are several times, as Todd has said, in the iteration of that warrant over 3 to 5 years where that public security moves around. And if there's intrinsic value, we have the ability to take those off at any time that we want it. They're registered. We can exercise them. And with that, it only enhances the returns to DPL and the portfolio. So I think that's important to note. And ultimately, a portfolio of warrants, a basket of those, is pretty compelling on the value proposition at DPL. So with that, we've established brokerage accounts. We've sold stock. This is a difficult thing these days in what we call the microcaps. In our world, let's call it sub 50, sub $100 million market caps. The brokerage community has made it very difficult to book securities. We have the ability to really, book the securities, sell the securities. So I'm very comfortable with our relationships on the street that we're doing that with, which is critical to us, to monetize these gains. We've hired executives to complement the team, bringing relationships and years of experience to enhance these returns. We have deployed over 4 million secured loans. Todd and I have raised, 25 million on top of that internally as well through the last 2.5 years. We've created these online portals, Spyglass Hill Capital Lending and monthlyinterest.com, that'll be key pivots for us going forward, where individuals as well as institutions can invest with the intent of receiving monthly interest on the investment. Thank you very much. Appreciate it.
Good job, Billy.
Thank you.
Billy, let me touch on a minute or two of digital power lending. There's a lot of opportunity in that space, and I think the most important thing to know if you were to look for the future, you were to try to gauge what things happen in the future, what would be some key milestones. One of them are going to be establish relationships with outside syndication. Does digital power lending get access to its own capital, its own balance sheet, without the parent company, that answer is going to be yes. Right now, we're in discussions with a lender where we'll syndicate and have access to around, it's a $200 million portfolio of capital that we'll be able to do in the merchant cash advance space, mainly restaurants, trucking companies, etc. That's a very lucrative space for us with our license. So if you're an investor that likes the lending side of it, look for digital power lending to get bigger over time. I've got we have a lot of plans for that business, but we're gonna take our time and try to do it right. DPW Holdings probably does not put a lot more capital in that space, but digital power lending and Spyglass expand their own balance sheet to match their ability to provide funding. So we think it has a lot of value to us.